Happy New Year, and welcome to the first Fintech Insider Insights of 2025. I'm Laura Watkins, Director of Media and Marketing here at 11FS. In this episode, I'll be asking my colleagues to put their reputations on the line, open themselves up to a little friendly ridicule, and boldly predict the future of fintech. After a year marked by incredible industry consolidation, we are all eager to uncover the biggest trends shaping the next 12 months. What will we be talking about in 2025? And more importantly, what products, people, and innovations will dominate the headlines? To do this, I have brought a crack team of my fellow 11s and Fintech Insiders who have spent the entire year measuring the biggest trends in the industry. Firstly, I'm absolutely delighted to welcome back to the podcast David Brear, Group CEO at 11FS. Welcome back, David. How are you? It's been a long journey to get you here.
Yeah, it's been a weird one. Away for, goodness me, nearly 6 months on the podcast, but actually 5 months from leaving my house, which is kind of bizarre. So haven't become a recluse in Norfolk. It was health matters, but I'm feeling a lot better and yeah, a lot happier to see you all as well.
Brilliant. Well, it's great to see you in person, which is nice. We're in the studio together and obviously great to have you back on the podcast. And we are also joined by Ross Gallagher, Head of Ventures at 11FS. How have you been, Ross? Currently snowed in, is that right?
Yeah, snowed in the snowy confines of Harrogate. But yeah, my internet, which was down earlier this week, is back up and running. And I am delighted to be here.
Fantastic. Great to have you. And last but not least, Dave Morris, Global Head of Technology at 11FS. How are you, Dave? Excited for 2025?
Yeah, it's going to be quite a big year. There's a lot going on I think David started to tease about, but I think there'll be a lot of announcements coming out, but there's a lot going on. So it's going to be good.
Foreshadowing. Well, thank you all so much for joining us. Let's dive in. So in the first part of the show, we're going to start by taking a look back at our predictions from last year. I say yours, not mine. It's always enlightening and sometimes humbling to reflect on how the year has unfolded compared to what we anticipated. But here's what we did predict for 2024. So the first prediction was from the lovely Kate Moody, who cannot be here to talk about her prediction as she is on maternity leave. And we wish her all the best. But she said fintech innovation would double down on the wealthy and mass affluent, which we'll come to. Financial well-being would emerge as a key battleground. That was yours, Ross. So we'll be excited to hear your thoughts now you're a whole year wiser on that one. And finally, yours, David, was a fintech would be bought by a bank. Let's see. So without further ado, let's dive in and start with Kate's prediction. Fintech innovation will double down on the wealthy and mass affluent. What do we think? Was she right?
I'd say that was sort of an emerging one.
Okay.
We saw some announcements. Obviously, regular on the show, somebody like Megan Kaywood announced that she's building something in the wealth space. So I think there was sort of announcements of those things happening. But I think the big incumbents in this space are probably still, people like Credit Suisse and UBS and those things are still trying to figure out who they are and how things work. So I don't think that quite happened, but there was sort of rumblings of maybe that being a foreshadowing for future years. Okay,
so kind of laying the foundations of what might come next. Dave, would you agree?
Yeah, I think so. I think this year will be when we start to see a lot of it really actually happen. A lot of people talked about it, but the action didn't necessarily follow through on all of the talk in every case.
Okay, Ross, what are your thoughts on that? Did fintech industry kind of take any strides in that direction, or do you think we're still in that foundation laying stage?
I think it did take some strides. I completely agree with David and Dave that it's kind of like, lots done. We're going to see more in this space. I think it is tempting to define either success or failure here based on, some sort of big bang event, like some disruptor that wasn't in the market previously coming in, making some serious waves. But we all know that the reality tends to be slower and much more progressive. I think we've seen some interesting moves from established providers, right? Monzo moved into pensions and investments, for example. Revolut moving into stock trading. Robinhood has now established itself in the UK and has some exciting plans for this year. So I think we're going to continue to see real movement in this direction. I think that mass affluent segment in particular is really interesting. I think we're going to see more inclusive, more intuitive products, sort of expanding access to that sort of wealth-like proposition. So I think it's a really interesting shout and one that's going to continue to evolve this year.
I think a lot of the stuff that sort of I'm struggling to remember the name of the business. I can't remember the name, but they acquired huge amounts of balances. I think almost the wealth space. Whereas before we saw robo-advisors and, the nutmegs and sort of little slices of those things, like almost like very attractive saving rates to attract really large balances, a la kind of what Marcus did, a few years ago to sort of bring those big balances in. So maybe that's their beachhead. Maybe that's how they think that the wealth space gets disrupted is, given that these sort of interest rate things became a thing again last year, then maybe that's where they thought their beachhead should be. But I definitely think it's somewhere else.
And then last year, we sort of looked at whether the wealthy and mass affluent are currently underserved. Dave, what's your thoughts on that? Have we had sort of new products designed for those demographics? Are they missing out in some way?
I think it's still the same products for that group. I think the problem, and I think possibly we'll talk a bit more about it, is if you look at the wealth space, there's, the sort of ultra high net worth level, you've got, yes, established stuff, but in the Stone Age, you've got the mass affluent with lots of things, but generic products that actually haven't really changed, haven't really innovated that much. They're chasing savings rates, ISAs, EFTs, etc., all of those things. Nothing really is innovated that much there. And then there's a massive gap in the middle that isn't really being served between the mass affluent and the ultra high net worth. So that's where I think there's a lot of things that can still change in that space. And for me, mass affluent, I think, yes, it's served, but not in a great way. I think there could be some disruption in that space.
And in that middle space probably takes us nicely on to your prediction, Russ, which was that in 2024, financial well-being will continue to emerge as a key battleground. As we said, this was your prediction, Russ. Was there any standout innovations in the financial well-being space that caught your eye or have actually changed things for people managing their finances in the last year?
Yeah, it's interesting, isn't it? Look, I think being really honest, I maybe expected to see a little bit more movement in this space this year. I think, especially in the context of the cost of living crisis and the pressure that consumer finances are under. I think, you only have to look at the resurgence of cash over the last couple of years as a tool for, financially strapped consumers to actually manage their budgets, to kind of get the sense that those digital tools that are currently available aren't doing enough in that sense, right? They're not going far enough. I think, this was possibly a touch idealistic from my part last year. But look, I think maybe it was more of a call to arms, right, than a true prediction. I think it's so important that we give consumers the tools they need that's actually going to put them in control of their finances. I think as much as I'd love to pat myself on the back for calling this one correctly, I just don't really think we're there yet, to be perfectly honest.
David, would you agree with that? In the last year, we've sort of seen rollouts of budgeting apps, salary advances, automated savings. Is that actually transformative? Is that actually helping people? What do you think?
There's a lot of people still who don't understand these things. So it's a difficult one, because almost the balance there between putting in a tool that helps you understand it versus giving somebody a process that helps it be done for them. I think there's an interesting sort of nuance between what those two things really are. It's going to be a long road, isn't it? I think a lot of, having been in a big banking organization, when tools like these are implemented, often people forget why they're doing them. And it becomes more about the creation of a widget or a calculator than it is actually anything that fundamentally solves a problem for a consumer. And, in many examples, you see that even, I won't say the name of the business, but even announcements this week, you're seeing, we've launched a thing, and it's like, well, that doesn't actually solve the problem for anybody, because you've got to A, want to do it in the first place, and B, engage with it before you even get any sort of support at all. There was always a bit of a weird one where any of these types of tools or calculators or structures always seems to end up in buying a certain product, which is if every answer is buy a product from us, then you probably can't trust the advice of the tool in the first place.
And to your point, a product's one thing, knowing how to use it is another. So the education that goes around knowing how to solve the problem and that is the correct tool to help you is as important as the tool in the first place. Yeah,
we've talked about it vaguely. I can remember, given I haven't been on this for a long time, but we talked about it a lot before. I think the education bit is a bit of a myth, though, because I think the idea that anybody wants to learn anything to do with any of these things is not true. You know what I mean? Like, actually, all of the evidence, all of the things, everybody will say they would love to know more, but I'd love to know more about astrophysics. It doesn't mean I'm going to go and do it, you know? So actually being in a situation where it's important to you, but that actually the knowledge you need is always going to be really difficult for people to do. This is where advice and guidance should be a much greater thing in terms of the responsibility. And I think actually things like consumer duty coming through, you know, in a, you know, first wave, and we're going to get more waves of that as we go. It kind of feels like the responsibility for financial services organizations to take that much more seriously is, you know, is only going to heighten from the pressure from the regulator.
Absolutely. Dave, what's your thoughts on that?
I think we're still in this space where a lot of the big, particularly the big banks, have this, well, if you put everything with us, we'll give you these tools to make your life look great. But people don't have their finances that way. And I think at the moment, technology is lagging behind on a lot of the open finance space. People don't necessarily trust it enough to be able to open up their financial life to some of these things, to show it more broadly. I think there's a lot of things that'll come, and you know, I won't jump into where my prediction's going for this year, but there's a lot of gaps there still in that space on the technology side.
So, David, I want to come to you next. Before we discuss your main prediction for 2024, we need to have a talk about a comment you made about Revolut last year. So you predicted that Revolut would gain their banking license in 2024, which, as we know, they did. Why were you kind of convinced that last year was going to be the year?
I mean, I think it was one of those ones where it was a saga that had dragged out for so long that actually it was in everybody's best intentions for them to gain their licenses. So in that sense, I mean, from a regulatory perspective, having the regulator knowing that they are fully regulated is like an important thing for them, you know. So kind of them being inside the tent rather than outside of it is, you know, really important for the UK, really important for them. I think from their perspective, actually, it unlocks ridiculous amounts of value as well. So, you know, knowing that they've been working really hard on this for years to kind of, you know, have everything in place to make that happen. You know, it just made sense, really.
Yeah.
So, and I think it was one of those ones where I think if it dragged out longer and longer and longer, I think, you know, arguably, if I was them, I would be looking at other shores to start that, to get a, you know, more hardened regulation in licensing in other countries rather than here. So, yeah, I think it just made sense for everybody involved in it, and actually, it kind of brings them into. I mean, we've talked about it again before. All of the, you know, they'll never get customers, they'll never get through this, they'll never do that. Like, and now they have achieved pretty much everything that they set out to do, and you know, based on the hiring plans, based on the adverts you see, look, you know, this is only the beginning for those guys.
Yeah,
so
whatever they're doing is working, right?
Yeah, they are. If I'm honest, I was saying this to somebody yesterday. They're the most relentless product development business in the world. Like, you know, including Google now. You know, like Google used to be the kings of that. Revolut just know how to get shit done in a way that nobody else really comprehends. And not just here, but in every geo that they deploy. They take the same methodology, the same structure, the same approach to making it happen. And there's something really, really impressive about that.
And just really nice to have them in the UK, regulated in the UK. Like, we can kind of claim them as well, which is really good for sort of UK's fintech reputation at the moment, right?
Well, I don't think we've been holding back our love on the basis of them getting regulatory approval.
No.
But no, I think it takes them into a different place. And, you know, I think they've worked really hard to make sure that, you know, by getting these licenses, it doesn't change who they are or change how they go about what they're doing. But yeah, definitely the tip of the spear, I think, for them in terms of all the things that will come to market over the next couple of years.
I do think if you're looking at success stories from 2024, I mean, Revolut has to be right at the top of that list, especially in the context of quite a few turbulent years. Sort of before that, you know, it's not just the banking license, but it's, you know, staggering valuation, you know, touching 10 million customers in the UK, 50 million customers globally. Off the back of that staggering valuation, you know, secondary share sales, that absolutely staggering returns for those early crowdfund investors, for example, and going from strength to strength. I think to the point that you guys were making. So just to put a real fine point on that, they've had a terrific year.
Yeah.
I think you know, it's almost got to the stage. You get shocked if there isn't something new coming from them each month. because it is that relentless. I'm not sure the UK license are going to help the London Stock Exchange, though. I don't think they'll go anywhere near that when they float. But
no, their CEO's already very much explicitly said he's going to do the opposite as and when they IPO. But yeah, 100% they are definitely a 2024 success story. And David, back to you. Your main prediction for 2024 was that a big fintech would be bought by a bank. So last year you predicted that the sharks would be circling for mid to large size fintechs nearing the end of their funding runway. What happened there? Do you think that 2024 marks a turning point for bank and fintech M&A activity? Quite a lot happened in that space.
Yeah, I mean, I think it's one of those ones. For me, I think I can claim that this has happened, but it's a little bit like looking at a horoscope and starting to believe what you read to a certain degree. So, there's a lot of big banks who have invested into fintechs, and I think some of that investment is almost an acquisition strategy. Obviously, people like HSBC and Monese, you saw an investment that was. It was about using technology, using the talent, using the teams there. But there's lots of other examples as well, and all around the world. I think the interesting thing is actually we're starting to see non-banks buying fintechs as well. So, there's a deal that's just come out this week where you've seen Accenture buying a core banking transformation business over in Singapore. And actually that for me is almost a sign that fintech becomes accessible to buying for all organizations to sort of kind of spread out in terms of what they're doing. So yeah, I think I can kind of semi-claim this one was true, but I think it's the emergence of a trend that given where funding cycles are and given how much harder it is to get hold of money to keep that runway going for fintechs that are probably burning quite a lot of money every month, I think this will be something that new acquisitions and new types of acquirers, I think it'll be something that we continue to see into this year as well.
Dave?
I think it was a big M&A year for the banks last year, and I think it probably reflects on the fact that customer acquisition is still hard for the big banks because and the easiest route is to actually go and buy a book from various people, and you see that with NatWest and the work that they've done there, the bringing of stuff into Barclays, some of the building society consolidation,
supermarkets, Sainsbury's, Tesco Bank, all those books were bought up by big banks.
Yep. I think we'd struggle to argue that Tesco Bank is a fintech, but I don't know. Maybe,
but in terms of the customer acquisition by big banks, they were buying books all over the shop.
Yeah. Well, and it's interesting the different slices that people are going into. I think from the fintech space, maybe the place that it really makes sense is almost into products that they're not doing. So, I wouldn't be surprised if somebody like a Monzo or somebody like a Starling acquires, and obviously Starling did with a mortgage business, didn't it? But actually with Monzo, you could see them, well, actually, if you really want to get much more deeply into the insurance space or the pension space or actually acquiring, as you say, the book, but also all of the regulatory capability, the processes, the governance, like actually it's a quick way if you've got the capital to accelerate your growth, isn't it?
Yeah.
I think you can see someone like Pension B getting bought up by someone.
Oh, is that prediction, Dave?
Possibly.
and would you say that, I mean, because you could see one of the big players going in and making that happen, can you? The pension dashboard and everything all sort of looming on the horizon, then that wouldn't be a bad shout for somebody to, solve all of your internal problems by buying somebody who's done it already, right?
Yeah, some of the people who aren't as far down the road, I wouldn't see an Aviva because they're already quite acquisition hungry, but they're a long way down the route of being able to solve that stuff, but your LNGs and the others are probably a way back on some of those areas. So you could see that.
It's interesting, the maturity, because I mean, we spoke about this way back in like 2016, 2017 is like the first tranche of this where people bought a thing and then immediately it was like, well, now you've lost all the talent. And, the announcement 6 months later where we're now shutting this thing down. I think, BBVA were a pretty bad, good, whichever way you want to think about it, candidate for sort of that in the first run. But it seems the things that, you talk about somebody like Aviva, the Wealthify acquisition that they did and, running that, building it up and, the big organizations seem to have sort of learnt their lesson now, which makes this type of acquisition much more palatable, I think.
It feels like they're more strategic about the acquisitions rather than we'll buy it because it stops us being hurt by it.
Yeah, and it feels less like me when I buy a houseplant, where it's like I have great intentions, but it's dead after 6 months. All these things prosper at that point.
Yeah, if you look at the nationwide purchase of Virgin, for example, that was pure strategy.
Yeah. Well, I wonder if this year, sorry, we're getting distracted, aren't we? But I wonder if this year we might see more from that, though, because I think I remember, again, I'm sounding very old here, but like back in 2010, I think I wrote a thing about Virgin is like the best brand for financial services, like because it could do anything and say anything and still prosper, But we've not really ever seen that. They came out swinging with basically the same products as everybody else had, just with a shiny red brand. That potential has to be realized at some point, else it'll just dissipate, won't it?
Yeah, well, they did try and swing a bit in the mortgage space, but then they sort of backed away from it, having not really got traction.
Yeah.
Russ, I want to bring you in here just to wrap this up. What was your thoughts on the kind of fintech bank M&A last year?
Well, firstly, I want to say that I actually really like David's houseplant analogy for that first wave of fintech acquisitions. I think that sums it up really well. Look, I think in relation to David's prediction from last year, but then also maybe a slightly wider point, like this is getting harder. Like, everything that we saw with like inflation off the back of the pandemic and the sort of interest rate response to all of that, like the markets are naturally more volatile and sort of by extension more unpredictable. So to David's point about like horoscopes and kind of feeling like there's something in this, I'm very willing to give us a little bit more wiggle room in that context and kind of say, yeah, look, I think absolutely there is there's a lot, David, in what you predicted last year that I think is playing out for sure.
Fantastic. And with that, we wrap up 2024's predictions. But what's next? Find out after the break as we dive into our predictions for 2025.
Girl, you have got to try this Laneige lip mask. Trust me, my lips needed that love. Love these vanilla vibes from Kayali. The top note is just so smooth. Smooth and stunning. That's what you get with this K18 hair mask.
Those brands everybody's talking about, they're at Sephora. Discover the hype with the hottest names in beauty, including Laneige, Kayali, K18, and Rare Beauty. Only at Sephora.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off. Welcome back to Fintech Insider Insights. Before the break, we look back on our predictions from 2024. Now it's time to dig into what we think is going to happen this year. David, congratulations on nailing last year's predictions. Let's see how your crystal ball is working for 2025. What are you predicting for the year ahead?
I mean, I think I probably, the conversation with Kate last year, she said she was on way more episodes than I was, and I was determined to make that right last year. Got that wrong. But I reckon with her being on mat leave for a period of time, my prediction is I'm going to be on more episodes this year than she will be. So
that feels like a safe bet.
Yeah, let's see how that goes. But I think in terms of the industry, I think picking up the thread that she had around wealth, I think the sort of movements we saw last year really sort of position more interesting disruptions in the wealth space. And I think it sort of plays a little bit to what you were saying earlier on, Dave, around the sort of more holistic approach to dealing with really that complex financial issues that the ultra high net worth and the high net worth are doing. It's always a funny one because you sort of go, it's not exactly people building technology in a Robin Hood sense, not the business, more the Nottingham Forest vibe. But so because it's always like, boo-hoo, they're underserved and overcharged. Oh no! But I think the reality of solving those problems is it's a multi-billion-pound opportunity for people. Like I say, if you look at somebody like what Megan Kaywood has come out with and said her aspiration is and what she wants to deliver in that, then it kind of feels like there's got to be a lot of other people who have had similar ideas. And, you know, I think if you look at where funding's going as well, I think the retail space, the commercial space, I think is particularly, you know, UK, Europe, I think it's kind of had its time and it's about maturity of those existing businesses. But I think we'll see some real disruption in the wealth tech and the wealth business space.
And a lot of people are going to be wealthier in the future with the great wealth transfer. $84 trillion of wealth is going to be passed over from baby boomers to the next generation. So, like, you know, the need is potentially going to get greater as well.
Yeah, I mean, yes and no, because people are always dying. Do you know what I mean? Like, because and you know, not wanting to be too brutal there, but it's like I remember having that conversation with people at Coots in like 2010. You know, and actually, so people die every year, and there's always a presumption that actually there's going to be a cliff of expectation. But I think what we're seeing is whereas before it was like, you know, technology's for young people and old people like men with briefcases. And it's like, actually, no, you know, digital is for everybody and people are where you need them. And that model, I think, is not only a shift of where everybody's preference is, but actually it's an almost inescapable thing for the big incumbent organizations in that space to deal with, because they not only have all of the, you know, technology debt and cultural debt, but they have a sales force who you can, you know, very rarely get them to use technology because their preference is, you know, paper and driving to somebody's house. So I think all of the inhibitors in the existing industry make it ripe for change. And actually very similar to what we saw in the retail space, in the SME space, is I think the big players will only kind of get their shit together when there's a large disruption happening by somebody coming and acquiring a bunch of customers. So, but yeah, this will, I think maybe by the end of the year, we'll see something big happen in this space.
Nice. Dave, you're nodding along there.
Yeah. Well, I think that, you know, you can sit and go, well, there's always been, as David says, people have always died. But why do people not transfer and go? Because there's nowhere else to go and it's too painful to move. So people tend to stick with, you know, if my father banked with Coots, I'll continue to bank with Coots, because what else is there? But so I think that's where the opportunity is to come and disrupt and offer something that's actually very different and something that's quite holistic in that space. And I think that's where we're seeing some of the wealth tech go now. Real opportunities for people and lots of investment in those spaces. So for me, I think, yeah, I can see it really being a year where this could start to really happen.
Russ, you're similarly nodding. What's your thoughts?
Yeah, I'm sort of deep in thought. I think what you said, Laura, about that transfer of wealth. I think yes, people are always dying, but I think there is an opportunity there, right? I mean, humans are great. Nothing beats the feeling that you get from that sort of personalized human service or concierge. There is a huge opportunity in digital for that to scale. And so I think there is something about like expanding that, certainly that experience of a wealth manager, making that sort of available to sort of wider demographics. But we're not just talking about, you know, taking the services that exist in, you know, a branch or in a nice wealth manager office or whatever it is and just trying to replicate that in a digital environment. Really what we're talking about is like, what does it really look like in a digital context, you know, to sort of really try and give customers that amazing concierge, that amazing experience. And I think, yes, huge opportunity, but the opportunity is because we're so far away from that right now, I guess.
So there's a lot of work to be done.
I think so.
Yeah, I mean, it's an interesting point, because almost like the wave of fintech hitting retail stepped up the expectations of that. I know there's a lot of, you know, people probably listening to this who've gone, you've gone from your straight retail account to like a private bank of some description, and actually you step back in time when you do that. It's, you know, you go from your push notifications and easy access and, you know, all of these things working together to, wait, like that, you'd send me a checkbook. Like, why are you sending me a checkbook? This is, you know, so there is an untapped opportunity. But I think to your point as well, Ross, it's like actually the Monzos, the Revoluts, the Starlings have actually raised the game so much for just mass market retail that the wealth proposition needs to be something really a step change to show that, because as we've sort of joked in the past, it's not easy in digital. Like, you can't replicate the nice thick carpet or the thick bits of paper or the koi carp in your foyer. You've got to sort of major on service, and that's it's not an easy thing to do.
And is 2025 the year the flywheel starts turning in that direction?
I think so. I think it has to. I think, similar to the other point with Revolut, I think there's too many forces that mean that this needs to happen. But it's easy to convince somebody to put 50 quid in a Monzo card because it's low risk. I think when you're talking about, $500,000, a couple of million quid, there's a different beachhead required around the size of the operation to begin with. So, it might take a little bit of time, but I think this is definitely where the opportunity lies for the next wave of change, but also the next wave of big investments.
I think it's going beyond the product as well, to actually offer us something a bit more holistic from a service perspective in there, because it's not just about, I've got a better EFT or a better investment here. What about my tax planning? What about my inheritance planning? What about, my long-term future versus my short-term? It's all of that side of things that I think is interesting, to how do you actually shape that around the products that you offer in that space. And I think that's where we can see some change in that.
Yeah, I think that's a really good point. Going back to Ross's in the first half of the show, if people don't understand APRs and what credit cards work like, or savings rates, then ETFs and the broader sense of what you do on those things, it's just speaking a different language, isn't it? So.
All right, well, we'll keep an eye on that one. But speaking of Ross, it is your turn. Could you tell us your 2025 prediction, please?
Yeah, 100%. So, look, I know I kind of said that my my prediction for 2024 through a slightly more realistic lens was maybe a rallying cry, and I think in that sense, then I've got to continue with it. The context hasn't changed, right? People are still struggling in such a big way. The need for the type of tools that I think we've talked about, the tools that really put customers in control, really build a more intuitive understanding of their financial position, help them build better financial habits, behaviors. I think they're more necessary than ever. So my prediction is, with those consumer finances still squeezed, cash making a comeback, as we talked about, I think we really do actually need to see huge progress towards sort of digital money management tools that actually make a tangible difference to people's finances.
And on that cash point, why do you think it is that cash is making a comeback in this particular kind of economic climate?
Because there's there's a security in having something in your wallet, being able to look at, okay, that's what I have to get me through to the end of the month. And I think this is sort of one of the things that we need to keep in mind when we think about how far we've come from like a digital payments perspective, sort of budgeting tools and all of that sort of stuff, is they can't just be a solution, a tool that we use when things are good and we're feeling flush. But the minute times get a little bit tight, we revert to the old ways of doing things because, there's a safety blanket feeling about that. And I'm saying that not just from the consumer perspective, but also for the financial providers that are trying to move people onto digital channels to build a better digital experience for consumers. Like, the reality is that this is unlikely to change anytime soon. Everything that I said around, you've got inflation that is just stubbornly sticking above the Bank of England's target. You've got zero economic growth here in the UK. You've got high interest rates. You've got government borrowing, the cost of that at the highest it's been for, this century. So it's a perfect storm that is putting huge pressure on people, on businesses. And we need to find a way that, really services people in digital channels, or else we are just going to continue to see things like cash continue to gain ground.
I think that's a really interesting point. It's your wallet isn't any lighter when you make a transaction digitally. You know what I mean? You feel no loss from it, and you can avoid looking at your balance really easily. There are new and exciting and shiny ways to get into debt than ever before, and that's really worrying, isn't it? We've actually started with our we went all digital with our kids for a long time, and we're like, I just don't think they're getting it. So we've started actually giving them physical money because we want them to part with something when they buy something. And it changes the behavior of them immediately because they're like, I have to give this real thing up, So, but it almost kind of points back to people doing envelope budgeting because of exactly that reason. There's there's separation, there's control. It's, giving them a real sense of their cash flow and their position for month on month where they're going. So, but that is almost that's a failing in dumb current accounts don't provide any service, do they? So being able to provide those types of capabilities it's sort of an obvious thing, but the financial services organizations are in a funny place with that, aren't they? Who do you think is best to provide these things, Ross? Because ultimately banks, I don't want to paint them as evil villains, but lending money is kind of where you make a lot of money, right? So, people being in credit card debt or people taking out loans is actually sort of the financial system. So do you think those tools are best provided by the banks or by somebody else or by a fintech or, whose responsibility is that?
I think that's such an important lens, and I agree with everything that you said. Like, this isn't just about necessarily innovation, right? It's about prominence, how widely available things are for the average consumer, how things, I think, probably line up with our psyche and everything that we've been conditioned on, David, to your point about like, it just is so much easier to get into debt than it is to build good financial habits and behaviors. And that's everything from, on a month-on-month basis, being able to balance income and expenditure to actually over time then building a bit of an emergency fund to then slightly longer term, what does that look like in terms of saving for the future, etc. I was really optimistic about things like Save Now, Pay Later, things like accrue savings, but it's a great proposition, but it's just not really established itself in sort of our psyche in terms of how we manage our finances. And the contrast to that then is things like Buy Now, Pay Later just keep growing, right? Like it's even integrated into the Apple Pay payment journey, which is great. Like, I think for in a specific context, it's a great tool for consumers to have, but I think it just really underlines that point that it is just so much easier. There's so many more ways to get into debt than really build savings and those good financial habits. I think, look, in terms of who should provide it, I almost feel like, there's absolutely a government lens here and like a regulatory lens. I mean, if we don't have that financial resilience at the individual level, you certainly don't have it at a national level or a global level. And we're seeing that play out right now, it puts government and public services and all of that sort of stuff under huge pressure. So I think it should be a priority for governments, for regulators. I think when you look, for example, if you look at India and what they've done with their unified payments interface, that's a really, really standout example of where governments have taken the lead on developing the sort of centralized infrastructure, making that freely available, bringing more people into digital financial services. Open banking here in the UK, right? We were the natural leader when it came to the regulatory mandates and all of that sort of stuff. Arguably, we've fallen quite significantly behind now the likes of India, Brazil, Australia. Open finance is, interesting, has huge potential, but I feel like we've been saying that for a long time. Like, when are we going to start to realize some of that potential? But yeah, it's a super, super interesting space.
I think I really wanted somebody like Snoop to be this, actually, and I know, for various reasons that hasn't quite turned into that. But I do think there's a place for an independent person offering these types of things, because I think with the big banking organizations, it's a little bit like McDonald's providing salads. Do you know what I mean? It's like, they don't really want you to eat those salads. I've never seen anybody eat those salads, but their job is to sell you fast food, you know? So banks' jobs are to sell you credit cards and lending and mortgages and all those high-fat, high-calorie things. So it's a little bit marketing when these things come out, rather than it being core to their purpose, core to the thing that they're doing. And I mean, core to their purpose today, like the missing thing is every bank's purpose was doing good for the community at the beginning, and actually, you know, a couple of 100 years of commercial success, and that becomes not the priority, but more a heritage thing rather than a shaping everybody's decisions on a day-to-day basis bit. So I'd love the big banks to do it, but I think, you know, to everything you've said, I think it's more realistic that a third party becomes those things, and maybe open banking gets us there, but it just seems like it's a very slow progress while other things are taking priorities, unfortunately.
We are sailing dangerously close to Dave's prediction here, but before we get into that, I just want to give you the final word on this one.
I think for the challenges, I think with a lot of what's gone on recently, a lot of people have lost trust in the big banks, and so it's almost got to this stage of, you're pushing me products that get me into debt with, you know, and buy now, pay later is so easy. You're almost on the edge of sort of some of the things that we see about the sort of gamble aware type ads at the moment, with some of those things with debt for some people. And so, you know, things have got too easy to get into debt in some things. And I think that's a reaction when you see people go back to cash, to say, if it's there and it's in my hand, I can't touch those things, and I know that I'm safe from that. And, you know, I remember my parents in the 70s. It was all cash and it was envelopes, and it was because they knew where everything was. And I think that's as David said, that's where people have gone back to. But I think some of it comes back to lack of trust in there, and then how do we build that trust back? I don't know.
Wow.
The gamble aware one's an interesting one, isn't it? Because actually, like you say, it's like we want you to gamble at like a medium amount, but not so much that you can't gamble later. Because if you can't gamble later, we can't get more money. But we want, you know, so there's like an optimum amount of debt, there's an optimum amount of gambling, there's an optimum amount of fast food. It's letting everybody know where the limits are, isn't it? You know?
Yeah, but then if you can't pay your electric and keep your house warm,
that's the problem.
That's the problem that we're hitting with a lot of people. When you see, you know, the staggering figures about something like 60% of support staff in healthcare and education have got secondary jobs and things like that. It's, you know, that has to stop.
I feel like we could talk about this one for a very long time, but I want to make sure that we come to you, Dave. So I'm really keen to get your prediction. Do you want to take it from here?
Yeah. So for me, I think we talked around this a lot, but for me, I think open finance is going to actually really start to come to the fore this year. It's going to become, you know, I when I sort of caveated this out, I said it's going to become big-ish. And I suppose the ish for me is because a lot of this I think will come in the second half of next year. And so because of a lot of the things that have been pushed, particularly in Europe, and some of the changes around the way that they're doing regulation, PSD3 coming in, we'll be back half of the year, and we know things always drift. So there's a risk that this will drift out. But I think for me, the big change for open finance in Europe is the introduction of the European-wide payment service regulator. So up to now, everything in Europe has been pushed in a way that ultimately was limited within the way EU works, that there wasn't a central directive. It was transported into every single part of the EU. Each government had to take this through their own regulations, whereas the PSR now brings that into a way that actually it will be unified. So the things that have taken out previously, you know, even you went back to PSD2 and things, is different in France, is different in Germany, is different in Spain, and you know, subtly different. You know, they're close, but now they'll you know, they've now got to a point where a lot of these things will push, and there's a lot of regulations. PSD3, although, you know, it brings a lot of things into that to empower consumers to have a lot more control over sharing their data, the mandate for dashboards of understanding where your data's shared and things like that. It forces people like the banks to be robust about opening up those services. They have to prove that those services are resilient and reliable. You layer in the follow-on regulations that go around that with the new faster payments world, the DORA resilience work and things like that you can then start to actually, for the first time, build a robust open finance system that will allow people, particularly the fintechs, to challenge the banks about what they're offering in that space. And actually, I think for me, will allow them to actually do some things that are a bit more innovative in that space and allow them to build solutions that consumers will start to trust in that and be more comfortable about opening up their data.
Okay, so combating the point you made on the last prediction of like trust is lacking, hopefully some of these changes will enable that trust.
Yeah, and my worry for this is that this is EU and you know it's catching up with some of the stuff that's in Brazil and things, but it's a massive market, and then to get this into Europe is huge. It'd be great if the UK was following close, but we're not quite there on some of these things. But I think there'll be some fast followers from you know the PRA and the FCA in the UK to force some of these things to happen. I know there's already started to announce around some of the stuff about resilience measures and things like that earlier this year, since Christmas. So we're seeing some of those things follow into that space. So hopefully, you know, we can see different products come into that space, different things, people being able to trust that their data is safe and being used in a way to actually, you know, hopefully build some of those things that Ross is talking about on having a holistic view of your finances. You know, allow you to be comfortable that my money is in 12 different institutions, but I can have a single view across that and a single pane of glass, which has been the nirvana for a long time.
I'm so with you on this in terms of almost like willing it to happen, because exactly to your point, Dave, I think it's so key to solving so many of the problems that we've talked about. My slight skepticism comes from, I suppose, looking back at how open banking was sort of rolled out in the UK. I think the standards were exactly right. You know, it was sort of centrally mandated. I think that made all of the difference. Where my skepticism comes from is, you know, I think a lot of the big banks in particular were sort of dragged into that world kicking and screaming. I think there was a cynicism in how they implemented it. And I think, you know, look, ultimately, I think there is an issue. You know, it's fundamentally probably a risk issue, but I think it speaks to ambition in terms of how far, particularly the big banks, are willing to push on these types of things. I think they want to stay very much on the complying with the sort of letter rather than really embracing the spirit and pushing beyond that and going, actually, how can we truly innovate here? You know, I think open banking had the potential to deliver a lot more than it has. You know, I think we've done pretty well in giving people that sort of joined up view across their transaction accounts, which is, look, don't get me wrong, super valuable. You know, it's given people more of an understanding in terms of where they sit across all of those, across that financial position, I guess. But really, it becomes a lot more valuable when you start to build on the tools that then help consumers actually make decisions, build better financial behaviors. And David, to your point about Snoop, I don't really think we've seen that. We saw, you know, a lot of fintechs write an open letter to the OBIE saying they're being too slow in terms of how they're pushing the big banks to sort of progress with some of this stuff. And so that really is where my skepticism comes from. I don't necessarily think that the ambition is there, particularly from the bigger providers, to really embrace this.
Which was the issue with open banking in the first place, right? They sort of got to the letter and no further.
Yeah, I mean, I think the issue, as Dave sort of said, really was the all of the regulation, and so far up until now has been very non-prescriptive. It's been, you know, the sort of original drafts for all the things didn't even mention you know APIs. You know, it was just a vagity of how these things would be done. Which actually, if you're doing it for one country, is one thing, but actually, if you're trying to allow every country within Europe to create its own standards to do these things, it is just nonsensical. You know, because actually, if you're let's say you're a big bank that covers the entirety of Europe, you've then got, you know, 15, 20, 25 different ways of implementing it. I forget how many countries are in Europe, my bad. since we've been gone, we just forget all of these things. But I think to your point, David, it does open up the potential though for more disruption, because in every vendor landscape, the thing that inhibits you going into a geography is customizations for that jurisdiction's regulatory climate. It's prevented core banking vendors going into different areas for a really long time. Whereas, for somebody like Bud, who gain access to those things and do interesting things with that data, knowing that there's going to be a single standard across all of these things to implement to, makes their development cycles so much easier to manage. It's why places like the US are as attractive, because there's federal governance that takes precedent over a lot of the local governance, which applies these standards in that way. But so yeah, I think it can be a big deal. But I think the change is, like I say, is sort of glacial in terms of the movement. If you kind of try to highlight all the ways open banking's changed how you do finance, you'd be hard pressed to do it. But it has. It's just they're not big flashy things. Like I've got a relationship with my retail bank, and I never log into my credit card. I never log into where my mortgage is. Because all of that stuff is presented to me. So arguably somebody owning the service and a bunch of dumb products in the background who, for those organizations, I'm a zombie customer. I'm using their product, but I'm not really engaging with them. They've got no ability to cross-sell to me. They've got no ability to engage with me. That has happened. I am better off for that, but they definitely are not,
Last word.
I think for me, the big change, I think, is actually around some of the, so in the original regulations, particularly, in the UK and across Europe, and I think was, if you were an AISP, so an account information service provider, there was no requirement for the banks to make those services up or available at any point. There was nothing in the regulations that said they need to be up 90% of the time. This is now in there. Third parties can get metrics, they can measure those APIs, they can actually claim losses about those APIs being down against them, so they can build a business plan around the resilience of that information and being available in there, which they never could have in the past. It's kind of, yes, we'll get it available, and we know that it's really good from Barclays, but it's a bit shonky from NatWest and whatever. And that's kind of the world that they're in when you're working in that space now. Whereas the regulations that are coming now across Europe will force them to reach a standard.
Yeah. That provision of service is super important, isn't it? Your points on trust. Like, actually, if you're a business trying to get somebody to trust your service, but sorry, customer, the API that sends the data, and it's like, they don't care. You're like, you just can't show me that thing. So,
and it's not your bank you blame. You blame
that service provider.
That service provider.
Yeah.
Okay. Well, I think that is all of our predictions for today. Thank you so much for joining me. That wraps up today's discussion. We are almost out of time. But as always, where can people find out more about you now that you're back with us? David, how are people best to find you?
I mean, hopefully in person. Like, I'm hoping many more frequent trips into London. So, if you're pooling around Shoreditch, then give me a shout.
Great. Ross?
Find me on LinkedIn, Ross Gallagher. And if you want to find out a little bit more about what we're doing at 11FS, jump on to 11fs.com.
Lovely. And Dave?
Yep, find me on LinkedIn and all of the various posts on there and the various things and all of our content on 11FS.
Brilliant. And the same for me. You can find me on LinkedIn, 11fs.com, or, of course, this podcast. Thank you so much for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much and goodbye. Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing Trust Center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.